Let's do a quick recap on the S&P 500 after the trade that we set up in yesterday's video. In yesterday's video, here's what we highlighted. The S&P had fallen into its trend channel towards the bottom of it, which overlapped nicely with our Volatility Box models. For our entry, we were looking for an entry near the 500 to 501 price target and looking for this reversal, this rotation back up to 507, which was the midline of this trend channel. If I zoom out in this video, or maybe rewind just a little bit, you can see the before and after picture quite clearly. Here was what price action looked like yesterday. We were looking at buying at the bottom of this channel, looking for that rotation to the midline. Now here's what happened today. We met that plan nearly perfectly. We did get the rotation back up to the midline, and after that, we've now seen that the S&P had a hard sell-off closing below that trend channel. Let's take a look at the intraday volatility first before we set the stage for what we think is likely to happen next. Now with our intraday volatility, for much of the day today, the S&P was just trading back and forth. A lot of muted volatility until the FOMC statement. Then FOMC came out and you can see the volatility that kicked into full gear. It's this volatility that took us into our 507 target, and that's where I took off most of my position. Now after that 507 target, that happened to overlap perfectly with the upper end of our volatility box model, so the inverse of yesterday's setup. This time we were breaching the aggressive and then the conservative, but for a short side setup, and we even had that 1-2 punch setup with the momentum going back and forth set up nearly perfectly. This is the 3 EMA crossing below the 8, where we saw the sellers try to take over control, the buyers tried to defend, failed, and you can see the selling activity that happened after that momentum reversed for the second time. If we zoom out, you can see that hard selling activity into the final 30 minutes into the close, which took us back towards the bottom of our volatility box models, but this time we closed below our trend channel. So in terms of that tradable move that we were looking for, we got that nearly picture perfect, all happening in one day, really in the span of a few hours, which isn't something that happens too often, but I'm going to take that as a nice victory and move on with looking for where I think the S&P is headed next. Now speaking of that, the Fibonacci levels that we have left are the ones down below near 490. Given that the S&P closed below this trend channel, which was already a bear trend channel, to me that seems like the likely next place that the S&P is headed. Any retest back towards the underside of this trend channel, call it near that 505 level, I think make for some nice opportunities to try and get some short exposure, maybe some puts, to try and play this move back down to 490. For now, that move that we were looking for, the rotation to the midline, we got today. We were looking to see what happened next. Were the buyers able to take us to the other side of the channel, or did the sellers win? And we've also gotten that question answered, at least with today's price action, with the sellers winning and that 490 level being the next place we're looking for price to head towards. I hope you found this video useful. For those of you looking to trade the S&P 500, be sure to check out the volatility box models as this volatility picks up. I think you'll find it's extremely useful for tickers like SPY, QQQ, and DIA. Take care everyone, and I'll see you in our next update.